Hey, Calvin.
Hey man, what's going on?
Hey, how's it going?
Good. I didn't take anything today. Everything just looked really slow and I don't know.
Me neither.
I made that mistake yesterday, so I gotta be more patient when it comes to sitting on my hands.
Yeah, the market's not really moving in a place where it's moving with a lot of gusto, though. And you have to keep in mind that the way that in the way that you're doing your trading, right?
Yeah.
There's a requirement, and this goes for everybody that's in the group. And this goes for everybody who trades, pretty much. The requirement is the price has to move, right? It has to move in a direction. You don't get paid if the market doesn't move in a direction. Now, there are certain strategies that can be invoked to help you to capitalize on a market that moves sideways, right? That's what I would say more like elite is, and people who just say they trade liquidity. Because a lot of times what they don't take into account that the market has a direction it's going to trend. They take into account that the market's going to go up to a point, react from that point, reverse to the point, and keep on reversing from points. And they basically trade the ping pong.
Mm-hmm.
But if you're trading supply and demand, if you're trading with market structure, if you're trading anything, you need the market to give you clear trading conditions, because that's where you make the most of your money. And even to an extent, they need those things too, right? But depending on how they do their trading, or depending on how tight their stop loss is and how soon their target is, it may look like they're just trading within what's called a grid. So your job as an analyst is to be able to identify when you have trending conditions, stay out of the market when it's not trending. And when it is trending, that's where you take your opportunities, because they have the best chance of success. The trade you had posted yesterday, what I was saying was, you really looked at it, you could see that for the last, I don't know how many hours, almost a day, the market had stayed between like a ping pong, stayed between one high and one low, and it hadn't really broken out of that range.
Yep.
So I didn't even need to look at your middle time frame or any pictures lower, because it was just very evident on the higher time frame what you'll see. Because you don't trade 15 minutes, you don't trade 1 minute, you don't trade seconds. You trade whatever's on the high time frame. That's the only thing that really matters. When you look at your higher time frame, if you want to make a winning trade, your winning trade is always like somewhere in the beginning or the middle of the higher time frame candle, and your take profit is always either the next candle or the end of the candle. Mm-hmm. So at a very basic level, all you're doing in the morning is saying, I anticipate the next candle will go in this direction, and you get paid for that. And if you're wrong, you don't get paid for it. Simple as that.
That makes sense. Yeah. It was those first 4 hour candles, like there were no breaks out of any kind of wick that was put in place during, even before London, like you said, before the day even started.
Yeah. So I mean, in a moment like that, all I do is I go to the higher time frame, I set an alert, and I walk away. So that way, once it breaks, great, I come back and see how it broke. Then I can update the alert if I need to. But I mean, and then not every day is going to be a trading day while being a day trader or intraday trader. So all you have to know is when is the market in your conditions and when is it not. So
yeah, no, I totally understand that.
AP Money, the greatest. And then Mara, please, hopefully I said your name right. I am a butcher for names, and I apologize if I do.
What's the deal, bro?
Feeling much more rusted. Wish the market was, though.
Have you traded this week?
No, No.
For some reason, like I've been doing good on my trades. I've been doing good on risk management. I haven't been doing good on my trades because I haven't been holding lately. I just don't know why. But my risk management, my entries, everything is on point. But I just haven't been holding lately. And that goes to what you just said. Like I need to start trading a higher time frame. Because I think what gets me in trouble, I take a trade on a 1 minute time frame, 3 minute time frame. And I keep looking at those little candles. But if I was just to go on a 15-minute time frame or a 5 minute, it was like it was just going straight down. It was like, man. So
Yeah, you can't get caught up on what happens on the lower time frame because it will always throw you off. You see a lot more candles. You see a lot of a lot of switching when it comes to like the lower time frames. So, I mean, this is just popping up your USD, right? And so we see the market trending upward. It goes down. It makes a chalk. It continues to go upwards, and it's trending downwards, and it's trending upwards. All of this happened within the middle of the day today, right? This is all the 1 minute. But if I go from here to here, from here to, let's say about here, right? On the 15-minute, it wasn't really much movement. So the market kind of went up, it went more sideways, comes back down, pulled back up, etc. Like this is the same movement, right? But ultimately, when you go to the 4-hour time frame and you look at that, all of that was just 2 candles. So you're thinking, oh, the trend is shifting. Oh, the trend has done that. When literally all the price was doing was going in one direction, but it was going at it very, very slowly. So within the 4-hour, it moved 2 candles that moved bullish. No overall direction ever changed. And from here, this was all just one pullback leg into this supply zone.
I was looking at a trade in there the first time it tapped into the supply zone, but I didn't take it for the exact reason that you just talked about.
Yeah, no, when you come back and look at it on the higher time frame, it's
exactly.
not, it really, like you get this news candle, building permits, price is not really enthusiastic because it's really starting to move sideways. Like we're all these candles right now are in the range of this candle. This one hasn't finished yet, but we really haven't moved out of the range that was created from this large impulsive movement that happened. When did this happen? Okay, this happened during London. So you get this strong push from London, and then after that, the market's just ugh. So when I see the market make a strong move like this, and then start kind of peeling back, I'm just kind of like, I'm kind of skeptical of the market's going to have continual movement. Knowing that we're up here somewhere where there is potential higher time frame supply. This could be an area that the market decides to go down from here or to continue to go here and make a chalk, right? But for the most part, the market's momentum and true momentum move that it had, you could see it clearly was here. This is the momentum. Then this is the consolidation, right? And now it's not showing that it's really not really interested in going too much of anywhere. It gave us a little jump because of news. But if you take out news that happened right here, and you go all the way back to essentially this is London Open. This is what some people consider, this is the end of the kill zone. Between the end of the kill zone, market was consolidating. Between the London Open, London kill zone, market was moving. You get into the New York kill zone, it took news to move the market, and after that, it's been shaking out after that. Like, there's nothing strong about the movements here. Potentially, you can capitalize, yes. It's just not strong movement, that's all. But your reasons why you should always think about holding trades, P-Money, from the higher time frame. Don't get caught up on what you see on the lower time frame because it's going to fake you out all the time.
Yeah, I mean, because gold was Gold was beautiful. Gold has been beautiful, and it was beautiful today. And I was in a nice sale from the top, and I just didn't hold. It was horrible. I'm like, I gotta start holding these, because like I've been seeing people trades lately on Instagram, and it's like, damn, I have the benefit of being taught trading from supply and demand, trading from like a higher low or a lower high, and these people are trading like outside the zone, lower, and I'm getting out while they're getting in. It's like I was taught I have an advantage of trading from a lower high and a higher low, so I need to hold these trades. So that's what I'm gonna start doing, because the entries are on point now. I just gotta hold them.
But yeah, always have a target in mind. So try to determine like where's your target? Where's your target trying to go? Like before you enter a trade, you should always have a place of knowing where you get out. Where are you going to get out? Because you can get in a trade go past your target, or you get in trade not go your target, right? But you have to be able to have a target in mind, because you're not going to hold to infinity unless we're talking about an indice. But you're not holding into infinity. We're not. If you want to be like a holder, then you need to be more of a swing trader, not even swing trader, because it really depends. You have to always have a target. Everybody has a target. There's always, even in stocks, there's a target. You don't just hold forever, because price can always come back and get you.
Hey, Brian, I have a question just about your management, actually. So for me, usually I always try to take a chunk off at or around the 15-minute high, but I notice sometimes or in this case, if I was buying, a lot of the times, when it reaches this lower high, for example, it'll consolidate and I'll wind up manually closing. Do you hold through that? Are there certain rules that you have in place to hold through that, or if price consolidates, do you just manually close it?
No, I have certain rules that determine if I'm a hold or close at a high or a low.
Okay.
Because I don't take off anything. I don't do partials.
Oh, that's right. That's right. Okay.
So for me, it's either I'm going to probably close all of it or I'm going to hold through it. But what I just made was a set of criteria, because you know that these areas are going to be resistance.
Mhm.
So you want to know if it's likely to fail after taking, so many times at that resistance area, or is it going to continue through? And so I'm generally willing to hold unless I see it take multiple attempts at this resistance area and it's going to fail.
Okay.
So, but I know to expect some type of pullback or something in the area, which is fine. But it's just, I'm not going to close just at the first sight of consolidation or some type of thing that I see at these areas, because that's kind of expected that's going to happen there anyways.
Okay.
But it could be wiser, for instance, to go ahead and take partials and say, okay, let's say if you're up for R, you take off 25%, then you could move your stop loss back to original, because then now you've taken off enough to cover your stop loss, right? And you wouldn't have to ever move your stop loss to break even. Because if you lost on the trade, you would just, ultimately get to the same point of a break even stop. But you could make it earlier if you wanted to, but just remember, as you take off, the earlier you take off stuff, the more that you are removing you're removing potential reward if it continues to go on. So some people want to lock in profit, but I'm very confident about my direction, and I'm okay with breaking. I'd rather break even and get like full TPs as it goes further into profit than I would taking some off just to know that I got some money on the table, and then like my loss ends up kind of equaling out with my partials. But that's a kind of like a personal decision that you have to make in your trading. Like that's just for me. The trade-off to me isn't beneficial for me in taking partials. But like I said, to each their own. Everybody has their their own way of how they kind of approach the market and how they approach reward. So it's just more of like I said, a decision that you'll have to make on how you want to handle your management. You there?
Yeah, no, that makes sense. I got it.
Cool, cool, cool. What other questions do y'all have today?
Hey Brian, so what do you think about that Chat GPT article I sent you?
Time to get rich.
So are they saying that it predicts like the news?
No. Mm-mm.
What is that saying?
All it's saying is that it's just doing fundamental analysis. So if it reads enough news headlines and the news headlines talk about a company is going to win a big contract, it's going to tell you to probably buy this stock, and it's going to make recommendations based off of what it reads from news. That's all it's saying.
So as far as obviously I'm in Forex. So as far as the US dollar and I trade gold, like will it determine the US dollar as well when the fundamental plays out, or?
Probably not, no.
Oh, okay. So just stocks.
Yeah.
Oh, okay.
I mean, everything moves off of fundamental analysis, right?
Mm-hmm.
The market really ain't going nowhere. It really ain't. It's been that way for quite a while. So you come up to a weekly chart, you look at gold. Gold has been in a range since greater part of last year, since the pandemic. Because as soon as pandemic hits, people start putting all their money in gold. They've been trying to figure out what's going on with the entire economy. But at least the range for gold is huge. You look at EU made a high in January. It's coming up to that high in January. But between that month, it went between this range of where it's going. Where it's worse, and you can really see it, is here on AUD USD, right? AUD USD has stayed in essentially the same place for the last month.
Damn.
Or almost 2 months at this point. Like, this is a really bad and very small range, right? Whereas when you look at years before, price was trending in mostly some type of direction. So this is what you've been dealing with the AUD USD since about March. You see, GU was at least on a decline all the way going back to 2021. It just went down, went down, went down, went down. It's gone up. And now the range that it's working with is pretty much at the top of the range. But this has been like this since December, right? So it's played between these two numbers. What you really want is for the range to play between something like this, because then we have ways and rooms to move. So if you go back to this was October. So this is from October to December, GU was going up, right? This is where you were catching all those trades from P Money on GU.
Yeah, I remember.
And same thing with AUD USD. What we don't want to get caught up is on this. This is why I'm not so enthusiastic to get up in the morning and trade. At UJ, there used to be a time when UJ was incredible because almost all of 2022, all it did was go up until October. Then after October, it started going down. And now we're playing in this within, a new set of spots for market structure. We got this weekly supply zone that is tapped into, but it's bouncing at this weekly supply. So it goes down, comes up, goes down, comes up. Will it go down? We'll see. Will it go back up? We'll see. Like, still a lot to be able to unfold. But gold is probably giving you the best movement out of all the pairs because everybody's fearful about what's going to happen to the economy. So when people are fearful, they go stick their money in bonds. They go stick their money into gold. They stick their money into oil. They stick their money into any alternative asset. Now, the Chat GPT is going to look at the headlines and be able to make recommendations based upon the sentiment of what it sees. But it's not going to say that. It's not to say that that's going to be, 100% accurate as well, too, though.
Yeah, from now on, I'm going to be asking it questions right before the news day, and we'll see.
See what happens.
Yeah, we'll see what happens.
But the good thing is ChatGPT can look through a bunch of information, and it can be able to kind of synthesize or analyze a whole bunch of different sources, which can be a lot faster than a human. So if you want to know what is the consensus on the interest rate, right?
Mhm.
Or for instance, what was it? So like for instance, if you're wanting to know, hey, is it likely that it's going that the oh, this isn't the one I was looking for. So, billion labor force. Oh, I didn't know they even had it. Cool. So you can have it analyzed. Does it expect unemployment to go up, unemployment to go down, participation rates, all that kind of stuff. So, oh, I want this one. I need to add this to mine. What's it called? But all kinds of things that you can unemployment rate. Ah, this is the one I was looking for. You can have it analyze all this type of data to be able to make a point and say, okay, this is what we kind of expect to see. Golly. Market is literally on fire. It's weird how we're gonna have this. We have this booming market and they're expecting this like horrible recession. So there we go. But right now, like having unemployment this low is like some of the best historically ever. But it's the reason why everybody's so on such pins and needles because we're doing so good, but inflation is so bad. So where is the
Also, unemployment is high right now. I say.
it's in such a great spot.
Mm.
Like it's in such a great spot. That's the problem. But at least two things have happened, which are actually good things. But I need to update this. But we essentially need for unemployment to actually go upwards and not be at record lows for inflation to go downwards. And that's what they're trying to hit for. And they're trying to hit for seeing that inflation is going to come down. Because right now it's trending in the right direction. And the thing that you want to compare it to, if I can find the comparison tool, because I cannot remember how to do this. Ah, here we go. Interest rate. All right, cool. So you want to get to a point where, thanks for showing me this because I didn't know. There we go. They want to get to a point where the inflation, the interest rate is above the inflation rate. And that's where ultimately where inflation comes down from. After that, the market should hopefully, as this continues to go, the interest rate's going to come down, but they want inflation to come down to approximately here, which is at 2%. So, oh, wrong one. Once we get to 2%, then hopefully that we're going to see the interest rates also, federal interest rates also come down as well too, so that inflation stays below. But in order to do that, they want to get things to pop off. So this is the target more than anything of where they're trying to get to. But what that means for us is that you're going to have to turn your attention to maybe other assets, other pairs, because that's ultimately where the market wants to get to. And notice, like for instance, inflation was running high 2017. They raised the interest rates. It gets over. inflation comes back down. As it comes down, they also start lowering interest rates. So if you want to look at a year that's going to be close to now, we could go back to 2018, and 2018 is tending to mimic what we're seeing from the market in 2023. So a lot of people say the market is cyclical. So let me show you what I mean. Get rid of the compare. I mean, what's it called? Has some of the best tools. There we go. Okay. So here we have 2018. I'm gonna go to the daily. Maybe it's easier to see this. 2018. So here we have this region 2018. This starts from January. This all the way goes into April, right?
Mhm.
And you can kind of see this is January. This is January, and then this goes into where we're at in April. And you'll notice the market has moved sideways, but not really gone too much anywhere, right? This one, it had a little bit more movement over here that you capitalized from, a little less movement over here. And pretty much most of your pairs, you're seeing the same thing because it's all about figuring out, the market wants to figure out what's going on. So once again, here's 2018, right? Stayed within some type of range. Here's 2023. Yes, it's making breaks, but you're ultimately still stuck within this range.
Yeah.
See how it's similar?
Mm-hmm.
So hopefully, as we get to the latter half of the year, the market tends to move somewhere. But it all depends if we're going into a recession or not. Even a mild recession hopefully should give us results where it's more of a trending. Whereas this, the market's just kind of bouncing around. So where was 2015? Okay, so there's 2018. So yeah, even from the weekly, you can see how they're very much similar. Hoping that we start seeing some breaks through though, because we want movement like this. This is where we capitalize on. Hopefully not going into something like this again. But we'll see. The market will have its twists and turns for us. What are the questions y'all got? Anything that y'all want to discuss? Anything that y'all have questions on? Oh yeah, gold's bad here. At least for gold, it hasn't been as bad. Yep. Got nothing for me?
Where is that? Where is that in gold that you just pictured to the left? What?
2018. It's all the same. 2018. If you want to backtest an area, backtest 2018, and you can tend to see, kind of what historically how it performed. Because 2018 is when the last time America was thought to be going into a recession, and that whole notion carried all the way in 2019. So
nice. Yeah. Thank you.
no problem. All right, y'all. If y'all have any questions, I am going to dip. But anything y'all have any questions, feel free to ask inside Discord. If I didn't get a chance to answer your question today, this recording will be up in the next 24 hours. We'll also have our office hours calls on Thursday. So if you have any questions that you want to see like visuals for, feel free to bring them to the next call, and I'll definitely do my best to answer them and try to give you as much clarity and detail. But I wish y'all the best of your trading. Make sure to trade in the trending market. Don't try to get stuck in consolidation. And I wish y'all the best. And I will chat with y'all soon.
Peace.
Peace.